Okay, guys, so welcome to the bootcamp day 3 speedrun bootcamp. So today I didn't have my assistant help me with the presentation, so that's why it was so delayed. And the topics we are gonna cover are hard to cover. It's hard to explain, but yeah, it happens. So what are we gonna talk about today? And okay, and if you have any questions, just ask. And if you leak, I'll kick you out. Okay. So what's happening today? Today we're going to talk about session timing and interval within sessions. Asian session, and okay, ignore this. We are not going to talk about daily cycle. Mentioning cycles and time theories. So I'm just going to mention them so you know what you're missing out on. Session manipulations, which is the key part of my trading style. And here you can see Tristan Tate, vector candles, rejection candles, and entry models that I use. Wow, amazing presentation. Thank you, guys. But we didn't even start. Okay, so session timing. We are gonna start slowly. Okay, Asian. For me, it starts at where is the zoom drawing? Shiba. Here. Oh, here. Okay, chill. It's right here. Yeah. It's too masculine for presentation. Okay. Wait, I'm gonna, yeah, this is the annotating tool. Okay, so, wait, what? What happened? Yeah, Asian. So Asian for me starts at 7 p.m. EST time, New York time, and ends at midnight. This is also ICT variation, and some Topg's use it as well. But for some people, it can be 30 past midnight. But yeah, this really differs from person to person. Also, RAM FX use it, I think, from 18 to 1 p.m., 1 a.m. What happens? So yeah, we don't really need that. This is just something special. You don't need it. And yeah, we can move on. CTD. DTCC. I'm gonna mention it later on. New York, not important. This was supposed to be deleted. So let's talk about Asian range. So today my main mission is gonna be to force it in your head to not think of sessions just as separate price action, but to actually somehow try to implement it with higher time frame and understand the higher time frame context, because I'm gonna show you why. So Asian range. So why is it there twice? Okay, so it's prior to Frankfurt, London, and it can be used as your daily guide, or at least as your guide for London session. Yeah, it's always the previous session that's gonna show you what's gonna happen this session. So it's a slow session generally, and usually it's just for engineering liquidity. And midline is also considered a liquidity level, right? And Asian session can either accumulate, manipulate, or distribute. So it can do all of those, but most common is accumulation, of course, and expansion is rare. So how the context for Asian range is important. All right. Okay, this is cringe, but what's the higher time frame context? We're gonna get to that. Are we heading? So the questions should be these for analyzing Asian and your current session, which would be London or Frankfurt. So again, what is the higher time frame context? Are we heading to another liquidity pool? Are we expanding into a POI? Or are we inducing something big, meaning sweeping some sort of liquidity? And then it can be engineering or re-engineering liquidity. All right, so yeah, where's the chat? Yeah, here. So if you see this, if you see Asian, let's say, building up to the upside, right? And we are building up sell side liquidity and buy orders. Can you tell me what's gonna happen on Frankfurt? Just seeing this, and any of you can, you know, turn your mic on.
We're
and
gonna
talk.
shoot something on the left and then go for the build-up.
Yeah, so it was a prank, and the correct answer is you can't know. You have to know the context, and that's what I was saying. You need context to know what Asian's gonna do. So this makes a bit more sense. If you have pre-Asian sub liquidity or induce something big or rebalance something big, wait, what? Then you have two scenarios only, and this is one. This can be your context. This is enough for you to think about the next session. So we are building up, obviously. So, and this would be, let's say, higher time frame bearish. Okay. So if this was bearish, we would only look for a structural liquidity being taken out and reverse, and this would serve as a fuel for future sessions, or you're gonna rebalance something big, reprice, whatever you want to call it. And that would be a good reason for reversal as well. That's a bearish scenario.
When you say rebalance here, Milan, do you mean
the range rebalance?
Oh, okay, range rebalance. Okay.
Yeah.
And okay, and this range rebalance has to be like important within the time frame. Like it wouldn't be like a 1 minute range. It should be like probably like 15 or 5 minutes at least.
Yeah, 15 or 5 minutes, because this whole Asian is what? 5 hours. So yeah, 5 minutes would be appropriate for that. But also it can be 1 hour, 4 hour, whatever the context is.
Yeah, at least 5 minutes. Yeah.
Fabien. So.
Yeah, who is that?
I muted him.
Prince mute? Oh, okay. Wait, why I don't see the Zoom call though? It's so weird. Yeah, whatever. We don't care about this stuff. And where's my chat? What's happening? Yeah, oh, here. Oh, okay. So yeah, so and if this was yeah, we're gonna talk about that. But if this was a bullish scenario, obviously we can go up immediately, or we can tap into something, sweep it. Wait, let me try it again. Sweep something, and then sweep the low, and this would be known as Asian whipsaw, which is in our Discord source. And I'm not gonna cover the post-Asian templates today because it's gonna be a waste of time. And so hopefully, do you see my chart? Can you press 1, press 2, 1 if yes, 2 if no? Yeah, perfect. So here, this is the example. We are in bearish scenario. We had Asian that build up, okay? And pre-Asian, it can be during Asian as well. But pre-Asian already started building up, that's first, and it rebalanced major range or OB. So from this, you can, with this information, you can pretty much expect the bullish day, bullish London, bullish Frankfurt, and target something from the left. So this can be a range, this can be our target, first target, this can be a liquidity, second target, and go to hallelujah for a reversal. But you know that this will serve as fuel for later. Okay, so this is one template. This is gonna be second one. And here you can see a nice one. And those templates are from this month or October. So yeah, so it's pretty recent. Yeah, so again, we had Asian buildup. After taking pretty much nothing, right? We only mitigated something here, some unmitigated orders. and that build-up ended on Frankfurt. On C of this structural liquidity, or maybe it was this. It doesn't matter. And this serves as a fuel for the rest of the day. So this one scenario for build-up. We can go to the next one. Wait, what? Yeah. Asian example. So this can be the second build-up. As I said before, it can be bullish. We can even induce or rebalance some range from the left, and we continue with a trend. And this is the last one. I don't know where the links went. Oh yeah, I showed you before already, you know. And this would be the last. If it's again pro trend, let's say we are bullish. Yeah, it may go away right away. Depends on what Frankfurt shows us, and we're gonna talk about it on Frankfurt manipulation. Or it can create liquidity just for a simple POI and react from that. So we're gonna have a look at that as well. Here, you see, this is not pro trend because higher time frame is bearish, obviously. But Asian build-up from higher time frame, it's bearish, but on, let's say, mid time frame, we are bullish, right? We are building up to prepare liquidity to go lower. So it's just a pullback. And within this pullback, we are bullish. Okay, so what happened? We build up liquidity. We had a clear target, inducement high, right here. And Frankfurt, London manipulated them out, mitigated this POI. This was pretty awkward, and I don't think anyone would be able to see this, at least not on this time frame. But yeah, mitigated POI and continued. So you can take a moment and look at it. And this is November, by the way. So all of those are recent templates and recent scenarios. Oh, so no, don't tell me it's disappeared. Right here. No, it doesn't work because I'm anonymous. It's not my PC. So yeah. Asian, where were we? Yeah. Yeah, here. So I'm gonna do this. Yeah, sorry guys. I slept 4 hours last 2 days. So I'm dead. But yeah, so this would be the second scenario, which happened again. And this was on September, after CPI, 13th of September. Yeah. All right. So there were more during October, but it wasn't that clear. This was the clearest one. So again, we had a bullish build up, let's say. We had a POI, and we sub something from the other side. It's as simple as that. So we just moved 200 pips below. We reacted to something from the left, and of course, a pullback to the upside would be expected. So that's why in this case, we are bullish. Okay. Okay. And if you guys don't get anything, just press it in chat or turn your mic on and ask. Okay, so that's for the first case. That's when Asian is accumulating, okay? And now Asian can also sweep liquidity, or it's called Asian stop hunt. But the context again here is important because just from this, if you have a liquidity sweep here, we broke structure. And when Asian does this, this usually becomes protected. and this becomes your internal liquidity, right? Internal range liquidity. But the context is, if the context is like this, you're, let's say, pulling back and higher time frame is bullish, and we take something from the left, then we are going to be bullish that day, obviously. So see, it's the same template, but the context is changing everything for us. Okay, so for example here, yeah. So let's start with this one. Asian had a stop hunt, and you naturally want to see a push to the upside. All right. So we had a liquidity sweep. We had re-engineered liquidity to confirm this area. We had a break of structure, and yeah, so this usually would become protected for you. But as you can see, this break of structure also swept inducement high from the left, and this all changed the whole story, right? And we were bearish instead of bullish, even though our pattern is showing us bullishness. So that's one. This is the second one, Asian range, pre-Asian, let's say. This was 15 minutes prior to Asian, but you can call it an Asian stop hunt as well. Asian range stop hunt, break of structure, and this would become protected for you. And with this, the price didn't do anything major to to the left, right? There's this huge FEG, and that's everything. So, you know, oh, what? Oh, okay. And the only thing I see here is just this rebalance that did nothing in the end. So yeah. And that's everything for here. And yeah. So let's go to the next example. Sorry, didn't notice. What?
It's fixed, I think.
Okay. Okay, copy. Okay. So again, you have Asian stop hunt, break of structure to the upside, and but the higher time frame context is bearish, so it doesn't work again. And there was one more, and here after this we took out all liquidity, and higher time frame context is still bearish. We are maybe mitigating something from the left, and now you see this Asian range. We created liquidity in the late New York. That liquidity was swept. It mitigated something, and then we break structure, right? So then this zone becomes protected, and you can trade off this with the higher time frame context again. So you see the difference, and you see the importance of it. And we have the last one. So let me think, let me remember. Yeah, so this was the last one. We induced something big from the left, or rebalance mitigated something huge from the left, which I don't think, yeah, which I think would be this case, because this high was manipulated. But yeah, so we engineered liquidity in late New York again. That liquidity was swept on Asian. We broke structure to the downside after Asian, and this becomes your IRL, and you can trade off this structural point as well from this Asian high. So you see, it's easy, like getting a London bias based on Asian is super easy.
What is IRL? What is it?
Oh my god. Nah, I'm kidding. It's internal range liquidity.
Oh, thank you.
Yeah. So here. And yeah, so again, this was the context that where it wouldn't work, or the scenario where it wouldn't work, we took something from the left. This is why you see this black line here. Yeah. So let's see. Asian swept previous day high. Let's say here. Did it sweep? Yeah. Let's say it did. Okay, it doesn't matter if it didn't. It doesn't change a thing. And we broke structure to the downside. But again, we are bullish. We mitigate something huge. We take this inducement low out, and yeah, and it doesn't work again. And I have one more example, and then we'll move to London, Frankfurt. Oh, yeah. So this again, where is it? Yeah. So we had late New York engineering liquidity, which would be this point right here. Asian swept the liquidity, broke structure to the downside, but we took this major liquidity out, as well as weekly liquidity out. This was September 28th. This was before the rally up. So yeah, you can't trade solely of Asian range. And that's what I'm proving to. Oh, what is this? Wait, what? Ah, yeah, let's go. Okay, so now we have, oh, yeah, so now we have one more scenario what Asian could do, and it would be Asian expanding. But this is gonna take a few minutes because this is very rare, right? So can you tell me what's Frankfurt gonna do of this Asian? You can't, because there's no context to it. It's a prank. Exactly. All right. So in this case, this is easier and this is realistic. We have an inducement high, which, as you know, if you have studied enough, you know, inducement high and lows work as magnets pretty much. It was created right away to clear something from the opposite side and now serves as a magnet, right? So, you know, this is gonna be our liquidity target. Now, if Asian expanded like this, let's say 50 pips or 40 pips, Frankfurt has only two choices. It's gonna either pull back, right? Or, you know, or Asian could pull back right away. Imagine this would be Asian, and Frankfurt could pull back as well and let London sweep the high. Or this would be Asian pullback, and Frankfurt just started building up, but not sweeping Asian high. When you see Frankfurt not sweeping Asian high or not moving from the Asian range, it's gonna show you, it's gonna mean that London is gonna have a lot of momentum. So yeah, and we can have one example here. Where is it? Wait. Hello. Did you see the notification of Sniper? Or do you just see my chart? Oh, no.
Only your chart.
Okay, good. Yeah, he was DMing me.
Seriously?
Sniper. So.
Why? Never mind.
No, I'm kidding, bro. Yeah. So, so here you have Asian range expanding, and we can count. This is 1.0, and this is 80 pips. Why? It's huge. And you see Asian pull back. Oh no, I'm gonna. Yeah, I have to mute him. Yeah. So, and here you see Asian pullback, and Frankfurt did nothing. So this is just gonna indicate that London is gonna be the grab, the time when liquidity is gonna be grabbed. And by the way, I didn't even know this is gonna happen in this example. Yeah, it happens a lot of times. When I join the call, when I see you for stealing the inducement high and low concepts. Yeah. So this is another scenario for expanding Asian, and you can just seeing this higher time frame, you should be able to imagine what's gonna happen. So let's say this is the external liquidity of something, and all right, so this liquidity, and agent expands and takes the liquidity, induces the liquidity. So what's Frankfurt gonna do? It has the possibility of going and sweeping the high, and you can trade off that to the downside, or price can already start building up to the downside and go to hell. And just imagining this scenario, I can remember 3 exact days on October that this happened. But we are gonna check the examples and see. So okay, I'm trying to think where the example is, but it's gonna be this most probably. As you can see, price mitigated nothing from the left. This is not a point or something you wanna trade off, right? This is something you consider liquidity right away, and do not even try to look for entries on that for win rate sakes. So, but Asian still mitigated it and re-engineered liquidity, right? So now we have equal low. You can call this a build-up, trend line, whatever. And you see Asian expanding, taking this liquidity out, and sells off the early session. But of course, this was just to induce and create more liquidity. So this is a rare scenario. I don't know why it's here. Well, let's check out the other one. Yeah, so this is a better one. All right, perfect. So as you can see, Asian is expanding, but we are getting stopped somewhere. Maybe this structural liquidity, or maybe the rebalance of this whole range, right? Because this is higher high, higher low, higher high. So we are just rebalancing this. Because on higher time frame, those wicks are not going to be visible, and price never tap into this range. So that's why we are seeing a reaction. And trade early sessions, early Frankfurt and London trading the opposite of Asian. So see, it's very situational, and yeah, well, it is what it is. You just have to study it. And then you have the last case scenario, which would be Asian engineering or re-engineering liquidity. And what I mean by this is either we are near the POI somewhere, that would be engineering liquidity for it. So for those who have been here for longer, they know that a POI, if a POI doesn't have enough liquidity, it's gonna be engineered, right? Let's say there isn't liquidity here. It's just a simple OB. So Asian wants to engineer the liquidity, or if price is targeting a different liquidity pool, let's say this is inducement high, or let's say a liquidity pool, it can be equal high, then and price wants to take it out, Asian can build up liquidity for early session to take it out in the reverse. Oh wait, what happened? Oh yeah. So we can check the examples, and all of these scenarios are realistic and can be used on daily basis. But yeah, so what's happening here? Asian, you see, price just took this structural liquidity out, and this is your external range, right? And any of those internals are our structural liquidities, and any of those points can be our target, obviously. But what is our final target? You see, we have this right here, and price. What Asian did was just re-engineering additional liquidity for this, and this proves you that this guy is gonna be the target, the main target. And as you can see, I just took it out, respected this maybe. Don't know, and you could have entered. No, I don't think you could have entered here, but just for educational purposes. So let me turn off everything. Yeah. Asia parents wanted engineer become a trader. Huh? Where is it? Yeah, it's messy. Wait, what? Yeah. Sorry, guys. We can check the last example as well. Here you can see again. This was the targeted liquidity. This point, previous day low as well. And Asian, instead of taking it out, you just re-engineer it. Or it took it out by 0.2 pips, but that's not really important. I still consider it equal low. And yeah, early session took it out and reversed. So that's everything for Asian that I have today. But I'm aware of the fact that this is not enough for Asian session, but we can continue all of the topics today on the day 4 of bootcamp, because there's so much and I can't cover that in what is this? And I can't cover that in one session. So yeah, so let's continue with session open manipulation. So generally it's a liquidity sweep, right? Induces something from the left, most often during Frankfurt and London. And this is why it's easiest for me to trade, but it's the hardest day for others. It's the hardest time for others to trade. Like first 30 minutes of Frankfurt, let's say, or first 1 hour of London, people want to avoid trading that. Might indicate a protected price level and offers a manipulation setup. Okay, so I'm gonna share my screen, and yeah, we can go from that. And we can look for examples on the live chart, because first minutes, it's like 1-2 minutes, can be 5 minutes. It really depends on the scenario. Okay, so what I mean by Frankfurt manipulation or session open manipulation is, let's say, okay, this New York is a bad example. This London is a good example. Okay, so as you can see, this was the first minute of London session, right? This candle right here. Let me change my colors as well. And yeah, so how did the London start? It started with taking out liquidity right here, taking out this wick. This was the first New York manipulation, a London manipulation. And then second manipulation would be here, right? This move up. And it took out Asian high, this equal high. And, maybe even this, let's say. Okay. Third manipulation was here. So it's usually up to 4 manipulations per session. It took out this and just to rebalance this. And it induced early sellers. You can imagine some idiots selling here. And the fourth manipulation was this overall move to the upside. And this move, I don't know what it did, but yeah, just to take out this equal high. And you see the first manipulation just re-engineered liquidity, additional liquidity for this liquidity pool. So this yesterday, London, and it offered pretty nice entries, but we're gonna talk about that later. Oh my God, sniper. And then this is perfect. You have Frankfurt open. Okay, there's nothing here actually. This whole move was a manipulation. And in live market, you can't know when the manipulation is over, but you can just anticipate it. Either with this, let's say, you see price going down, taking this liquidity out with and creating equal lows, right? So you know this is indicating that there might be a reversal coming soon. And it's just inducing early buyers. You can say this is your FBOS and this would become your MSU in future. This would become your inducement, this would become your key BOS, and this is your protected structural point. But yeah, you can only anticipate where the manipulation ends and trade it like a simple price action, like a normal price action. Yeah, I'm thinking of this. Yeah, there's nothing more in this. So we'll look for 2 more days and we'll continue. How long was it? 46 minutes so far. Perfect. Yeah. Okay. Yeah, okay. Yeah. So this can here you can see perfect manipulation within first minutes as well. Right from the session open, it shoots up and induces early buyers. Right here, right here, right here. You can't know this, but you don't want to trade off this. We know that every POI, that every recent POI that broke structure is most probably going to be a trap. Unless it's a safe build-up or a really tight build-up, all right? So the first move was a manipulation. The second move to take this guy out was a manipulation, right? Mitigated this, and we broke structure. By the way, this would be a valid entry, and if you put your stop loss here, it would be a valid stop loss. But yeah, happens. Yep. So we're gonna check one more day. So yes. Oh, this is perfect. Okay. This is not a traditional manipulation, but yeah, let's look at New York. Right here. New York Open. So pre-New York Open was engineering liquidity, early sellers, right? Oh, what? Early sellers right here, right here, right here. We had a strong wick. This becomes liquidity for the wick. This wick is inefficient, obviously. And New York opens with a manipulation. Literally the first candle of the session, right? And we take out this buy side liquidity. Now, as we build up buy side liquidity, we also build up sell side liquidity right here. In live market, you would say here. You could have said here, and look here with interest. It's just totally right. Yeah, I'm checking it. Yeah, but this one was liquidity though. Too clean. So the second manipulation would be this move. And not traditional manipulation because it was Swift news. And this was the third manipulation of session. And we took out all the liquidity that was there from previous days, from the whole week, and from the left. So yeah, and we can look at London and finish it there. Or New York. Yeah, New York had nothing this day. And London had nothing as well. So let's look at one more session. Do you guys understand it, or do want to ask something, just write it in the chat. If you understand it, press 1. If not, then press 2. And write a question. Because this 2. Oh no. Want to ask about breaker structure? Yeah, I'm gonna cover that. Breaker structure, like for entry. Yeah, we're gonna talk about that on entries. If you're asking about the entry that I talked about before. Yeah. So here again, first move of the session was a manipulation right here. And literally it's the first minute right here. We took out this Asian high, let's say. Then we took out this weird breaker liquidity, right? And the second manipulation was here. We just took out early buyers of the session. And the third manipulation might be here. Yeah, the third manipulation might be here. And with this manipulation, we took Asian high. And these cells are easy to take, right? There's no magic sauce. It's as simple as that. So yeah. So let's continue. And that's enough for the session manipulation. Okay. So Frankfurt Open is a manipulative time window. What does it mean? It means that price can just do this, you know, and it's really hard to trade. But let's say 30% of the time it will offer us a manipulation setup. But I'm gonna show you. So there's a possibility of taking out Asian range high, a low. Oh, there should be a high here. And first 30 minutes usually serves as an inducement for London. So this can't be applied on technicals that often. It's just an ideology and a mindset that I have towards Frankfurt. And that's how I anticipate the London moves. Frankfurt high-low can become inducement for London manipulation as well. And you can see this on the whipsaw, on the Asian whipsaw template that I sent you on Discord. So Frankfurt Open, London Open opens at 3 a.m. Eastern time. Kill zone is first 2 hours, so from 3 to 5 or 3 to 6. 3:30, which means 30 minutes after London Open, is to 4 is a big boy time for me. What does it mean? I'm gonna show you, but there's a high chance of a reversal during this time window. But the whole trap time of London is 3 to 4. Okay. And what does it mean? Is you're gonna have a lot of manipulations here. 11 EST time, 11 a.m. EST time is London close, where we have potential pullback or reversal. So I think I'm gonna show you on chart right now. So you see it's being used I'm using it on daily basis, but it's not a daily confluence, like a confluence you can use every single day. Because then trading would be too easy, right? Okay, so let me clear the zoom. Okay, this day was bad because we only had accumulation for news somewhere in London, so that this day doesn't do. But yeah, so the reason why this buy before we hitting stop loss is, again, see, for me the real Frankfurt Open as well, or all session opens are 30 minutes after the actual open, And you can see here exactly on the 30 minutes after Frankfurt open, it took this guy out and continued out. And this would be the prime setup for the Frankfurt. So yeah, and here, London session, 30 minutes after session open, price give us a nice reversal for the early session or for the whole day. It can be a small pullback as well. So yeah, so here you see once. Then let's continue. Don't know about this day. Oh yeah, here. So here you can see Frankfurt was manipulated in the first half, right? People were induced to sell. Then true intention of Frankfurt was shown and we are buying, right? So what day was it? 17th? Yeah.
That's today.
What?
That's today, right?
Today's 17th? Oh,
Yeah.
this is today. Oh, yeah. I was wondering if I entered here, but I was sleeping.
Today is 18, right?
So yeah. So here you see 30 minutes after Frankfurt open, true intention was shown. And this all just serves as liquidity. And after breaking this could be a valid trading range for us. So this one, and then London. Let's test it out. I don't know what happened really. I didn't check the chart much today because I was working on the presentation, but bam, 9:30 to 10. I'll be looking for sells after taking this build up and mitigating this weird POI. It's as simple as that. So this was today. The previous one was yesterday. Let's find, let's say, 2 more examples, and then we'll. Yeah. Oh, there was nothing on this day. Oh, this. Okay, perfect. Okay. But it doesn't work every day, as I said. Here you can see a perfect example, because the whole Frankfurt was served as liquidity for London, and you can see it right here. When price was here, I sold here and took the TP after 12 pips, because when you see this, it's just creating additional liquidity. Again, it's respecting this, creating almost perfect equal highs. And yeah, so the Frankfurt doesn't work here. There's one more time interval, but I don't use it, and it's last 15 minutes of Frankfurt, but it's too messy, and I don't want to complicate your trading with time too much, because then you would focus on time instead of price, which is the priority. And then here you can see 9:30 to 10 offers us a nice reversal again. Right here. For the sell, right? Taking out the structural liquidity, mitigating this. Easy stuff. Let's do one more day. Yeah, so this day doesn't work. Yeah, it sucks here. Damn. Yeah. Yeah, you know what? We can do a different session. We have to save time. Why would I sell here? Yeah, let me check. Because we just took out a huge Asian high. And that's why I wouldn't sell right here. But here as a confirmation entry. After this reaction, it will be obvious that we are gonna be selling off the whole day.
And you wouldn't sell initially in Milan because we didn't sweep it by much, right?
Oh, wait, what?
So you wouldn't sell after the Asian sweep because we didn't
Yeah.
sweep it by much.
Yeah, let me see. Asian sweep. Yeah, I wouldn't sell here, and even if I wanted to, I don't see a possible entry here. You know, maybe here, but this would be too much for me.
Yeah,
This is, yeah, I would wait for deeper mitigation, but I wouldn't look for him. There isn't a possible entry, except for this wick as a confirmation, like a confirmation entry, but you can always execute, right? But again, as the Polish guy says, you can't know, you couldn't know, and the only reason why this is just a breaker liquidity, and this not even as an inducement high, but it's just a build up, you know. But yeah. So when you say it didn't mitigate anything, how would they not continue it? Huh? You're just mitigating this huge OB on higher time frame. That's all there is to it. So yeah, there's nothing here. This is 14th of November. Yeah, we're gonna check if I entered him. All right, so let's continue with the presentation. Oh, and we have New York. So New York opens at 8 a.m. New York time, and manipulation time really varies on New York because the session itself isn't that manipulative, and even in kill zone, even in first 30 minutes, you're not gonna get that many manipulations unless it's news or something. 8:30 is for me a real market open, and some refer to this as trap timing as well. But yeah, I don't really see it as trap timing because, you know, from my personal experience, it doesn't do anything that would trap anyone, in my opinion. The ideology of trap timing on 8:30 is if you have a valid OB, let's say, and the price is going there on 8:30, it's gonna blast through that OB. But this happened like twice in the last 2 months. But yeah, I didn't look deep into this, so don't take my word for granted. And the whole New York is just gonna be a potential continuation of London or a reversal of London, right? So let's say we had Asian, Frankfurt, London. This is London. Then it's either gonna be New York open pullback, New York open continuation, then continue a trend of London, and then closing, London closes, price reverses, or pulls backs, or New York reverses, right? And New York just pull back. So that's all there is to it. And I think I'm gonna show you chart as well on New York because but lately it's the real market open didn't play out that many times because it was news. The previous day was flooded with news. So I'm looking at more charts. At the end, this is news again. So the ideology is the same as Frankfurt, and you can test it out on your chart. I didn't have much time lately, and I'm sorry for that. But the whole ideology is 13-minute of inducement, and then 8:30 price shows real intention and real order flow. So yeah. Okay, so now we are almost at the end of our first half of day 3, and we're gonna do day 4 as a continuation to this session. So vector candles, generally candles with huge momentum bodies or wicks. So it's just gonna be what is this? Yeah, so it's simply just a candle, long candle, another long candle without many wicks, another long candle, and I use that for entry, and we're gonna talk about it in a while. So let's check the link. Yeah. So here you see two perfect examples. Marubozu candle. What the hell is Marubozu candle? Marubozu candle. Yeah, pretty much. Yeah, and we can translate. No, you know what? Definition of vector. Oh no. Vector right here. No, this is bad. Google Translate. Translate. There is sniper FX candle too. Really? Wait, so I'm gonna. Yeah, okay, it's not here. Whatever. It's just high momentum, and it's gonna vent someone out. You know. So generally, bodies bigger than wicks, and with huge momentum. And where is the chart again? Yeah, here. So here you can see two perfect examples. How can I draw this? Right, this you see clean. Oh, this is wrong color. This is a clean candle, bullish, 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 bullish. You see the momentum in here. And when I trade of liquidity sweeps, I want to see momentum into it. Otherwise, it will just be too fake. Right? This is one example. And there should be another one. Right here. See? Look at the cleanliness of those candles. And it's usually 3 is enough for me, or even 2 if it's into the liquidity sweep. But yeah, here you can see price took it out and has a nice reaction. And see here again. Look at this candle. Look at this candle. Look at this. It's super clean, right? With the momentum, we took out this liquidity, one bearish candle, and this would be a valid entry for me. So I think that's all I see, but there are more examples in this chart. It's happening every single moment. Here you can see, you can consider this vector as well, as we took out this liquidity and closed below it. One bullish candle, and this would be a valid entry for me as well. And then you see this momentum to take this liquidity out, you see rejection candle, and you can enter on this as well. As simple as that. So that's everything I see here. Maybe even this, but this might be too small for me because this is what 5. This is yeah, this is like 4 pips. But if this was higher time frame or this was a bit larger, then I would consider it as well. You see, the momentum closes above one bearish candle, enter. So that's all. Do you get it? It's simple, right? You can press 1. Yes.
Yeah. So I literally thought the vector candle is when price sweeps the liquidity, then you can like have to look for continuation, but mostly sells. But now this is kind of like giving me a different definition, like a different meaning total, right? So I'm kind of like confused though. I'm kind of like really confused. Can you like just do a quick recap, please? A quick recap.
What was the definition that you talk about?
No, I literally thought, I mean, what I used to think the vector candle, according to your charts, right? I actually used to think it was you know, the high efficiency, inefficient candle, right? Yeah. But then I literally used to think it's, you know, after price sweeps liquidity, then you want to like look for continuation. That's what I've been practicing all this while. So
can you draw it? Can you draw
okay,
what you mean? Can you annotate?
Right. So basically, I literally should think it is only when price, takes out liquidity, right?
Mhm.
So and you want to like probably look for like continuations for sales. That's what I've been practicing all this while. So I literally
Like you want big candles as a reaction to the downside?
no, to the upside, right? Taking out liquidity, right?
Mhm. Yeah.
Then you want to like continue, like look for
Yeah, like
sales.
going up with
Yeah.
vector.
I actually want to look for sales, right? That's what I used to think, actually. From your charts, you understand, like from your own chart,
Oh,
that's what I used to see. And that's basically what I've been practicing.
and it works?
Right. Yes, most times, right? Most times. I don't know if I've actually been doing something wrong instead.
Yeah, okay. If it works, then congratulations. You found the hidden gem. But yeah, what I meant is into the liquidity sweep.
Okay.
And then if we see this, what does it mean? It means that those people are induced to buy, are induced the wrong direction after taking this out with such momentum. And the best case scenario would be if the price closed above this, is they're gonna think, okay, there's more momentum, this is a valid breakout, and they're gonna put their buys and want to continue. So that's the ideology behind it. But if it works, as you said, I'm gonna look into it as well. Then you're a genius. Yeah, yeah. But yeah, you see, it works here as well. But I think it's just because of the liquidity sweep. But other than that, I never look into it the way you did. Yeah, well, thanks for the input.
And I have a question, Miran, regarding the liquidity sweep. So after we sweep the liquidity, you want to see like orders flow down, not like momentum down, because it would create an inducement high. So we want to see like more order flow, at least like, like ranges mitigating.
Yeah.
Right?
Yeah. Like after entering, it would be nice to see like a simple MSU or a simple trend. But I enter right off that.
Okay.
I have got one question.
Who is you?
Mayank.
Mayank?
Good trading.
Oh, okay.
So you see this has a liquidity, so price should close above this. Is it
Close?
mandatory?
Yes. For example, in this case, I wouldn't sell here because there's nothing, and you see it even lines up. So what I would be looking at here would be maybe rebalancing this and going higher. But yeah, if it closed above this, and let's say even above this, then I would sell. But yeah, we're gonna talk about that in entry. Don't worry.
Okay. Thank you.
So this is vector, and the last thing we're gonna talk about is a rejection candle. So I don't trade off supply and demand zones, but yeah, but there are two entry models that I use. It's either gonna be an MSU, which we have talked about too many times already, and I would enter off here, or it would be a mitigation of a rejection candle. So what is the rejection candle? We are heading to a POI, right here. And simply said, is price is just rejecting it. And what would be the best is to have first rejection for inducement to people, and then take it out again, closes. And yeah, so you have to always wait for the candle close if you're trading off a POI. That would be the best way to trade. So if price closes here, I can enter either on the close, 20%, 50%, it doesn't matter. And we can check this. Wait, what? Please tell me the link works. Okay, it doesn't. Oh no, I can't do presentations. Yeah, so let's check it out. Oh, yeah. So for example, here, we didn't really have the wick as I drew before. Like here. And then it would be taken out, but it doesn't have to be. It's not an obligation. Price, we took out liquidity, we mitigated a supply and demand zone, and we did have a nice rejection candle. And you see, this wick is clearly bigger than the candle, right? And we can enter off that right away, or 20%, 50%. So this is the only example I have, but if we have more time, we'll look into that as well. So yeah, or I'm trying to find other one on chart, but I don't think there was anything else. This as well. Yeah. We'll look for it on chart. So yeah. All right. So that's everything you need to know to enter the same trades like me. And then it's all about experience and anticipation.
Miran, I've got a question regarding the boys. So
the boys,
yeah, the OBs. So what do you consider an OB? So it
an
might
OB,
be
any supply and
yeah.
demand.
So it can be a wick, it can be just a candle, like a body candle,
Yes.
and
So,
nothing else. Because
yeah, look. Am I sharing? No. Wait, what? Here. Okay, look. It can be a wick. So this can be an OB. It can be a candle like this, right?
Mhm.
This is a traditional way. It can be a wrench. A wrench is an OB.
Okay.
Let's say, let me find the appropriate one. But in this case, it's not that. It's not. Let's say
for
even
example,
here, this is an OB.
Yeah, but that's imbalance as well. So that's my doubt. So because everything can be a point, because everything is a range, basically.
Yeah.
So so this is something that I struggle with. Like, if we're mitigating imbalance, do we need like an F boss, or because I'm not too sure about what to consider an OB.
Oh, okay. So if you want to trade OBs, like use MSU or something like that, just use supply and demand. Just use a normal candle or wicks is the safest way. But I don't trade like I don't make a range like this, say this is an OB and put my entry here right away, right? It's just an area that I know price must return to rebalance the price, and then look for a lower confirmation entry within that area. It's just an area of interest. But yeah, OB would just be this. And yeah, like if
Like
I
a
saw a
1 minute
rejection
candle.
candle of a range like this, then I wouldn't really take it. And yeah, so I don't know if that answers your question, but
Yeah, it's more like a 1 minute candle or 1 minute wick, basically, or like lower time frame candles, I guess.
yeah, lower time frame candles, but it can be higher time frame. Well, wait, what was that? What was that question again?
No, I just asked that sometimes I confuse like OBs with like I didn't know if we mitigate imbalance, but it's inside that range, like a small range, it's considered an OB or imbalance.
The best way, or what I personally like to do, is I just mark it out and I check the lower time frame, and it's not imbalance. And if it is a supply demand, then I'm more comfortable to trade off that. Yeah, but if it's just an imbalance and it sweeps liquidity, and I see a wick like this into it, I wouldn't take a trade of that, because I only use rejection wicks on supply and demand. Usually, if price sweeps with a wick, it becomes an inducement right away, and what you're gonna see is price taking that wick out again and retraces or reverses. So yeah, and about 50 and 80% of FVG, that's not important. That's just a general area for price on higher time frame.
Excuse me, Milan.
Hmm?
I have one question for you.
Who is you?
I am Jafar.
Wait, what? Who?
I have I have the bad level of English, but I can explain
Okay,
it.
it's okay.
Just what is important for you in your strategy? What is important?
What do you mean important?
Yeah.
Everything is important.
Liquidity of high time frame.
Yeah. So
What-
look, this is everything I look at, okay? And I want to talk about this in the next session, but if you really want to know,
Okay.
we can make a notebook online. No, notes. Yeah, online notes. Was it Pornhub? Oh no, it's not Pornhub. Okay, chill, guys. What the hell? So it's here. Okay. So it's always higher time frame, order flow, EPA, liquidity. That's everything. That's everything you need. And then you look at the same on lower time frame plus manipulations. So let's say this LTF manipulations. This. Let me think. I'm creating this like on the off the top of my head. So yeah, I wanted to do this for the next session. And in the next session, I'm gonna give you a full usable plan.
Just what is EPA? What is EPA?
EPA?
EPA, yeah, EPA is internal banks. This, but
No.
EPA, I don't know.
EPA is inefficiency and EPA is efficient price action. You can see I explained it in the previous session.
Thank you very much.
Yes, are you new here?
Thank you for this Zoom. Thank you very much.
Yeah, are you new here? Are you a new member?
Yeah.
Oh, okay, I see. Okay, yeah, I explained everything already. But yeah, we'll have one more. We have one more additional session for EPA only because the concept itself is too deep and too complex. But yeah.
Yeah, you know.
So let's continue. So we have entries. Let's start by So entries, everything I use, or I'd like to, I'd love to say this is everything I use for entries, but it's not, obviously. But from now on, we'll have traditional Zoom breakdowns again and price action analysis again. So yeah, if I forgot something here, it's gonna be there. It's gonna be, let's say, 10 more sessions where I explain everything, all price actions in detail. So MSU setup and S&P. This is simple, right? Let me put this guy here. Where's the whiteboard? Yeah, I cannot. Yeah, what the hell? Yeah, so let me draw it on the whiteboard and then we'll. How do I? Bro. Yeah, okay, perfect. So MSU setup is supply and demand, right? We have either, let's say, supply, and the supply doesn't have enough liquidity, or it does, but it's still engineers. Who knows? So what's happening is our MSU. It can be this FBOS inducement, enter right here, or enter on lower time frame on confirmations and target the key BOS and maybe even something from the left. So this is simplest. Oh no, it's so, why is it like this? Yeah, it's so ugly. So sorry for that. And this would be for buy, right? MSU, FBOS, inducement, key BOS, and we fly. And we can trade over this as a protected point as well. So then we can have a single candle mitigation which refers to the the rejection candle or an engulfing candle that I sometimes use as well. But yeah, let me find this screen. Is it this? Yeah. So we can look for entries right now, and I'm gonna show you examples of some as well. But give me a second, please. Oh, yeah. So yeah, so this would be oh, so this would be my entries, and let me find you a rejection candle or mitigation of a rejection candle. But it's not happening that often right here. For example, perfect example. Someone also entered on this trade today. Congratulations, shout out to him. So what happened here? So what happened here? We had an MSU, right? FBUS inducement. This was the first possible entry. After this candle close, and you see this rejection candle on this, on the POI. This was a supply. I know this was a demand. 1 minute, I think. Yeah, it was just a weird wick that was liquidity, obviously. But if you have a chance like this, and you see a candle closing like this, you have such a rejection, you can take it right away from the open. So, but if you miss this, press engulfed, you can take a mitigation of a single candle like this, right? Of the engulf of the rejection candle. And here again, this tap into an OB, rejected, you can take this price, take this entry of this. So this is one example. And let me find another one. Yeah, I should have prepared something. But yeah, I was doing other things. So yeah, there's not much. It's not such a common entry for me, but I use it sometimes. And this was the only time I used it today.
So Milan, regarding on the right there is a long, there is a rejection candle a bit on the right. No, go to the right. Like move to the right. No, to the other side.
Right.
Yeah, you see that? Yeah, that wick on the right.
This?
No, yeah, that one. Okay, so my question is, would you consider?
No, this is not a mitigation of OB for me.
Okay, yeah. Okay, so this is not OB. Okay, even though it's mitigating a range, it's not OB.
Yeah, it's just rebalancing
the range rebalance.
Yeah.
Okay, understood. Thanks.
So this is why I wouldn't enter off here until we see this engulfing. And this would mean this is a break of structure on lower time frame, right here. So this would be the entry. After the confirmation that this level is legit. But other than that, I would, what happened? I would not enter here. Even though it's not even an MSU, it was just internal, right? This is the structural point. It's just a build up into build up, and this basic lit cycle, right? Inducement mitigation, simple. So this, yeah, and this is a mitigation of a single candle as well.
Milan, that trade
candle.
That trade that you took today was a rejection or of
this? Yeah, this was easy. So you see, for me, it was vector, considering even though there's a lot of wicks, but what I saw here is we started inducing people to buy. You see this momentum to the upside. It doesn't even have to break structure or anything. And you can consider it an inducement already. All right. So we induced, then had some fake reactions. Now it goes slow, it goes down slowly. And every time it breaks the low, it will pull up back. Let's say this is 1 minute candle, And in the live chart, you could have seen that every time it broke, it went up, and it was around this area and pulled back, like let's say 5, 10 minutes, 15 minutes before the close, and then it closed bearish. So yeah, so that's why I consider this an inducement. This is also a build up. You see this momentum to the downside, and this I think took out some liquidity. Yep, yeah, but let me check. Let me double check it. Right here. Yeah. Yeah, so it took out this liquidity in this and just mitigated this inefficient with 50% over top, right? And just because the price closed below it, which would be around here, it closed below it. And you see, this is what I'm talking about. When price take out liquidity with wick, then I want that wick to be taken out as well. So this is what happened. Then I see price broke structure to the upside, let's say, or even this rejection is enough for me. You see bullish close. I'm happy to enter on this, but I was taken out by 1 pipet, no, by 0. Like it was perfectly close. So yes, well, that's not even a valid loss for me. That's just market being market. And then just a mitigation of an OV, not even a mitigation. Yeah. So let's check what entry model I had. Yeah. So MSU setup, you all know that single candle mitigation. So now you know it can be against a rejection candle, for example, or engulfing, mitigation of engulfing. Vector sweep. Okay, this is more interesting. So I use this when price takes out liquidity and closes above or below it. So if we are taking out buy side liquidity, right, and price takes with momentum, it has to be a vector candle, let's say here, and closes, one bearish close, and I enter on the close or on the 50% if that close is too big. So let's find an example. I think I deleted all my trades from the chart, but we can find something. I think we can still find something. Yeah, so yeah, this would be a perfect example. I didn't take it, but it was super valid. So here, here you see we have this structural liquidity that's created randomly, really, and price took it out with vector candles. Two is enough. One bearish close, and I would have gotten sell into this. But you know, I'm the worst person when it comes to ping pong, and I just like to trade in one direction. It's more chill. And this will be the second. No, it's not. Yeah, I think on news it was pretty easy. No. Yeah, this. So we created this high, and that day I knew that we are gonna be bullish, because the XY showed so, and we had news soon as well. So of course you're gonna engineer liquidity, and we already engineered the sell side, so on the buy side is remaining, right? And here you see, we took this structural liquidity out. It is also, it's not even MSU. Well, it is. This would be a FBOS, this would be QBOS, this would be inducement. But with this inducement, we took this liquidity out, closed above, one bearish candle, and I took mitigation of 50%. So that's it. And I can find you one more example right here. So just like this, right here. Or no, let me find you a better example. There must be something. Yeah, this was a bad day. Yeah. So this was the original idea. And these buys were the easiest buys. So this was on 14th of November, if you want to double check it. So what price did here is it went down, created perfect equal lows, induced people to go up. You have internal breakout structure, you have build up. Then we have vector candles. See this momentum going down, taking out the liquidity. Now you even see what I showed you before. If we take out liquidity and we form a wick, that wick is most probably going to be an inducement. It was taken out and one bullish candle. And you see, I would normally enter here, but it's too big. So just a mitigation of the vector. And this is a super nice setup. Let's look at textbook. But let me find you one more. Yeah. So if I see price taking liquidity without closing, again, I want to see a candle. This took out liquidity, induced people to sell, and then it took out again. And then you see the whole engulfing bearish candle, and I just take a mitigation of it. So it really varies and depends on the situation. But here again, I mean, it's so simple, right? So here we didn't take liquidity from the left, but we had this strong structural point. You can see this took liquidity out, this did break structure. We can even use fractals to confirm this is a fractal. Let me turn it on. Yeah, see, even if you take it eye, you can see this fractal. And so, and you see price is creating equal highs right above it, or right on it, right? And then one candle with momentum closes below, one bullish momentum. And I didn't manage to get in time here, so I waited and just took a mitigation of it. So it's simple. And here again, you see, we are taking out the, oh yeah. Was this the day someone asked before? No. So we took out Asian liquidity, and even after we took it out with a wick. This is the reason why I didn't sell here, but I waited for this wick to be taken out and sold of that. And I just saw after the reaction. So we took it out, we wick it out, we went down, and we closed pretty bullish. But yeah. So this is the vector candle or the vector liquidity sweep. I don't know. I didn't give my entry's name. Double boy wick. So that would be the liquidity sweep with a wick. Then I want to see the first wick to be taken out. If this forms on whatever time frame, I'm gonna take it. And I use it as an indication for a higher time frame as well. Here you see a nice example. We took out this internal liquidity, structural liquidity, whatever, right here with a wick, and then that wick was taken out again. After that, I'm happy to buy here. You can find a few more examples. Is this Mario? Is that the Mario music? Yeah, here again, this wasn't even a liquidity sweep. It closed above. Oh, it didn't. Nice. So it took out this liquidity, formed a wick, okay, and people start selling after this. Some might see this as a rejection, and it wicked them out again. It even broke structure to the downside, and I'm happy to sell here, but I didn't because, yeah, that was stupid. I was looking for buys, but all buys. This is my new technology, by the way. I close all trades at 12 pips, which is a magic number. But yes. So let's
You mean you close or you put break even?
No, I close. I
Oh,
either
close
close
like full TP?
or close 80% and and do break evens if it's news or I know it's extreme of higher time frame. But yes, it works like butter, counter trend.
Oh, but you mean counter trend only?
This was counter trend.
Okay. I thought you meant like always in
Yeah.
every kind of trade.
Yeah.
Okay,
You see, I was fully aware of the fact that we are gonna be bullish AF, but I still bought. And there's a reason to it. I'm really bad at continuation trades. So yeah, but all those buys, it's TP. I think I had one loss only, but it's not here. Yeah, this was, no, this, yeah. I lost 4R on this. I bought premiums. And yeah, so this is the only loss. Yeah, the news just released bearish. Sucks. So wait, what was it? We were talking about entries, right? So that's the double wick for me. Session manipulation setup. Okay, this is the final sauce of today's, and simple mitigation on build up as well. Okay, so I'm trying to think what I meant by this, but we'll get to that. So a manipulation setup. We already had a diagram, and you already have, let's say 10 examples on this code, but I'll draw it again for you. So now we know that a manipulation on session open is a liquidity sweep pretty much, or an inducement for some people. Yeah, this is fine as well. Doesn't matter. So this is, let's say, and it works the best on Frankfurt Open. I tested it. Yeah, am I quiet?
No.
Okay. I still increase my, okay. So, this works the best on London and Frankfurt, but best on Frankfurt. It has over 70% win rate, I'm confident to say. And 2 of our members created their own trading plan just based on this setup. It's a simple setup. You do it once a day, and no, let's say you do it once a week, and you get crazy win ratio with crazy RR. But of course, there are weeks that offer you more than one setup. So what's happening here? We have a build up. This is Frankfurt Open. Oh, FFO. But again, the context is very important, right? If we are counter trend, if we are higher time frame bullish, this is gonna be your end. You're gonna be deleted from existence. So only 3 or 4 conditions for this trade. Yeah, let me write. Yeah. So first condition is a manipulation, obviously. Manipulation. So do we have a manipulation here? Session opened, and we started with this liquidity sweep to the upside. All right. We took this guy out. Okay. Second condition is mitigation of an OB. Whatever OB, it can be a wick, it can be supply demand, but it has to be on 1 minute, and it has to be visible. It can be a breaker, or it can be imbalance. So let's say we have a base drop right here, and this becomes our OB. Why not 5 minute? Because that's too big, and a 5-minute OB can be a sell to buy, and then huge imbalance to the downside, and this would become a breaker. And why is it dangerous? Is because you can have internal structure here, and if this was a breaker, and price took this guy out, then price can already take this guy out. For mitigation of breaker to become liquidity, it only requires to take the internal structure. So mitigation of an OB, manipulation, and finally a break of structure. It can be the best I would say is external, but this doesn't happen a lot. It happens. I'm not even confident to say it happens 5 times a month, but you can just take an internal break of structure, and then this will become a protected point. Protected, so it's P, and you can trade off that. Unless, as I said before, the higher time frame context plays against this. If we have a previous day low, and that previous day low is going to be taken out, of course, previous day low is going to be taken out. Of course, I'm not going to sell from here anymore. If I want to, I'll wait for confirmation. I'll wait for, let's say, vector candle who will take internal liquidity, or a rejection candle on this OB, and then take a mitigation of it. But other than that, no, there's no other choice, no other option. Okay, so I'll show you example of this. There are 4 conditions in total. Are there? Yeah, that sounds sus, bro. I don't think there are, but I'm gonna double check. Let me look into the source. And yeah, it's been 2 hours already, so I'm gonna let you guys go soon. But I have to find this, and I'll show some examples as well. But where is it? Oh, here. Being a part of build-up. Okay, so no, those 3 only conditions. And another conditions would, like, you know, a bonus would be a high time frame build-up being the context for you. But yes, just those 3, it's enough. And I'll show you the examples now. Oh, still 20 people. That's a surprise. Okay, I'm sharing. Wait, I don't know what I'm sharing now. Sharing screen. Yeah, you should see this. Yeah, okay. So do see the presentation, hopefully. So, and mitigation on build-up. Yeah, still thinking about this, but we'll get to that. So for the entries, for the session open manipulation, I'm gonna zoom in. Can I zoom in somehow? No. Yeah. So where's the zoom tool? Yeah. So what happened? We opened with a manipulation. See this push to the upside. And I'm gonna send you guys all those links so you can check it on your own. But we had a manipulation right on the open. We took this structural liquidity out, and no, I can't actually. So, and we broke structure, so this becomes protected. Don't worry, I'm gonna send it to you guys. Another one. This is something I wouldn't take, and you see I took it only on the confirmation. But so what's happening here? We are building up, obviously, on higher time frame, and build-ups are protected most of the time. Now we took this guy out. Let's say no, we didn't. We did. Yeah, we did take it out, and we saw this liquidity, right? So what was the POI? We started with a manipulation to the upside, right? We took this liquidity out. We respected this OV, and we broke structure to the downside, right here. So that's why this POI became. No, this is not FOP. FOP is cringe. I don't know how to use FOP. So yeah, and we'll have one more. This is my own observation that I managed to get, and here would be another one. Yeah. So as you can see, price opened with a manipulation to the downside, right? This is the Frankfurt Open. Liquidity taken out, respecting the OB, and breaking structure to the upside. After this, mitigation, easy. So let me check this link, by the way. But I think there is no more. Yeah, this was just a flex with my entries. There's nothing more. Yeah. Also, when we talk about those wicks, by the way, when I mentioned a candle, a wick, and then we have another candle that takes the wick out, or a wick that takes the wick out, then this is stronger structural point than just a wick and reversal here. You see it serves as a build up here, didn't do anything, and serves as a build up. And this high will serve as a build up as well in future. But this guy, see right here, we created a wick as a fake reaction. We took it out, served as a POY. Here again, we had a wick. That wick was that wick was manipulated. Strong structural point. So this all refers to bootcamp day 1, right? But it's in more details. And yeah, I think that's everything for today. So let me check entries. Wait, what? Yeah, so you see, yeah, so I hope you guys enjoyed it. You know, I know oh, no, there's one more. So I promised to spill some time sauce for you as well. Okay. So, maybe some of you guys expected CLS or DTCC, or I know ICT 90-minute macros and 90-minute cycles in general. Okay, so I'm gonna show you some timing possibilities that some are using, but I don't use them personally. And the reason why I'm not teaching them is because I believe it's just it's too chaotic. That's first, and it doesn't work. The second, but everyone can find their own taste. So what's happening here? Right. So first we'll talk about 90-minute cycle. 90-minute cycle as as in general came from ICT, right? ICT created 90-minute macros, and then he split it into 12 and 18 intervals. Oh, and we didn't mention weekly cycle as well. Okay, I'm so sorry guys for this unorganized presentation, but I'll do it next one. But yeah, it's in Discord. It's really simple, right? So I'm gonna turn the test cycle on. Is it this indicator? No. Yeah, let me find the correct indicator. Session test. Yeah, perfect. So the ideology is from ICD is that we have a weekly cycle. I'm gonna draw it for you simple. Okay, I can cover it now. Let's say we have Sunday, and then Monday takes out Sunday low and starts inducing people, right? And this can be Monday or even Tuesday. Those 2 days, or even Wednesday sometimes it happens. So what happens here? Monday and Tuesday usually serve as inducement for the early week to induce people out, but it doesn't work lately because of the trending market conditions. So let's say this works the best on consolidation Okay, you have you have this build up on Sunday. Monday takes out the sell side liquidity and induces. This is Monday. Let's say this is Tuesday, and Tuesday has the high possibility of becoming a high of the week, right? Or, yeah, or it can be Wednesday. Of course, it can be both. It can be all of those 3 days, but 80% of the time it's Tuesday. So Tuesday becomes a high of the week, let's say. Wednesday traces, does nothing. Then we have Thursday, which is my favorite day, and many of yours. So Thursday is a reversal day for me. I don't know what ICT teaches, but it happens. This can be considered a reversal. This can be considered a reversal. And within those, we have London kill zone, New York kill zone, and Asian isn't counted, and London close. So why is this important? If we understand the weekly cycle, the ideology is that the whole market is fractal, right? And how he does it is he starts with 2 a.m. No, 2:30. Really? Oh, okay. I don't care. This is from an ICT trader. We made the script for him. So you see, every single day of those works as trading days, and that's how the ICT use it. And then if you split the days into 12 and 18, you can have, oh no, you can have, shit, what is this? Yeah, you have the whole day happening inside of it. So what does it mean? This from the first 18-minute interval, this is London kill zone, this is New York kill zone, and this is London close. And then it happens every single day, like until London close, I think. Yeah, like it ends in the middle of New York. So this is one time theory that exists. Nope, I don't use. I did study it. It works sometimes it doesn't. Yeah. There are traders who use this. Then we come with a simplified version, which is CLS timing, and then you have again 90-minute cycle. And in those, and if you listen carefully, you know that I said in those 18-minute time frames, or in those 18-minute intervals, there are kill zones. So this works the same. Those 18 minutes are manipulative times, right? So there's another time theory. Then you can use open, high, close as theory. You know, a candle opens, it goes down, it goes up, it closes, as simple as that. Then I have my own theory that every candle shows its real intention in the last 10%. Let's say we have, or 20%, meaning if we have a 1 minute candle, meaning 60 seconds, last 20% of it is 12 seconds. So in the last 12 seconds, if price is bullish, let's say, if price bullish right here, and we are here, and price does this, you know, it will show its real intention in the last 12 seconds. So the whole time, the whole 48 seconds, let's say, the price was doing this, and then in the last seconds, it just shows it's bullish. So after this, I can use it on 15-minute time frame. I can use it on 1 hour time frame, just for confirmation for the move. And after this, if price closes like this, I know it's gonna be bullish, and I continue buying. So this is what I use. And then let me remember some more time theories. Yeah, and then you have, it's almost same like open, high, close, or something like that. This is, I don't know who uses it. Yeah, let's check Instagram. Yeah. What is this? Trading Freak? Was it him? Yeah, let me check real quick. And no, it was the other guy doing. Yeah, it was Ruben. Ruben has his own timing, which I found pretty interesting. And what he uses is he only trades for our POIs. And if price comes to the 4-hour POI, oh no, why is this chart so dirty? He has to wait for the 4-hour to close for a reversal. Let's say this, I told you 2 weeks ago or 3 weeks ago, this low is going to be protected, right? It took out external liquidity. And yeah, even though this is inducement low, it becomes protected. So I think he saw it the same and he marked it as POI. The price came to a POI, closed on 4-hour, and after that he starts looking for buys. Same here. Let me find a good example. But I didn't have enough time to look into it yet, so I'm so sorry for that. But let's say this is an OB for him. He waits for this 4-hour to close, then price does something, and he enters. Yeah, it's just an interesting fact. I don't use it. Same here. You have a 4-hour OB. Price comes into it, closes, and he starts selling on the close, on the opening of the next candle. I mean, it's pretty interesting. This could have served as his OB, let's say 50%. I don't know how he trades. I'm not friends with him or anything. This price created perfect equal lows for it. Price came into it for our close, and he starts buying. So it's pretty interesting and works on all time frames. And I think that's enough time source. And it's just a fun fact for you guys, like a bonus and things for being active in the community and being positive. So if you don't have any more questions, we can end it here.
If I may ask you, like, how do you actually use the OHSC, like the open, high, low, close?
I don't.
Yeah. Right.
But yeah, the only way I use it, or the ideology of it I use, is for sessions, and that just means that I know I look at sessions as candles, okay? And as I said before, a candle has to be opened, has to go somewhere, then goes to real direction, then pulls back. And this is London. Look, this is an opening of the candle. This is an opening of the candle. Price goes up, all right? So this would be this, goes up, goes down, pulls back. As simple as that. So this is the only way I use it.
No, it does make sense. Like, it's pretty interesting. Thank you, man.
Go, what?
I
said, thank you, brother. It's pretty interesting.
Yes, it's interesting. Like, all the theories are interesting, but it's not really necessary. And I said this 100 times, and I'm gonna say it again. You shouldn't be looking for additional source. You know, you won't even implement all of those. Like, most of the source work, well, I didn't see any practical use if you already have a strategy. It's same as looking for Yusuf leaked course, and this is referring to all of you and most of you who who are trying to learn from it. I saw some of his leaked courses as well, but without the whole thing, you can't really learn anything, and you're just gonna confuse yourself. This also applies to people who keep watching leaked courses. You're gonna learn nothing from that, you know. It's all about being at charts, and yeah, like the time you put in watching something and absorbing info from someone must be below 10%, and the 90% is your time at charts, and only experience is gonna get you to profitability. Do you use the entry indicator, entry helper? Yes. No, I don't. but I can show you how to use it in the next. Okay, so hope you guys are not that disappointed from this session. And yeah, I'll try to put more effort in the next one. But yeah, at the end of the day, this is a $100 mentorship for someone, $200. So I'm gonna keep the value at that cost. And yeah, okay. So good night, guys. Can we close it somehow?
Me?
Yeah, you can send me the recording things.
1 second.